Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. In the today's revision class, we will be revising Essay 800 series. In this 800 series, we are having three standards: Essay 800, Essay 805, and Essay 810. And if you see, these three standards, they have been amended for May 2025 examinations. Since there are amendments in this standard, what I'll be doing is I'll be trying to go slow with respect to these three standards, covering all the amendments. Okay. And before starting the revision lecture, a small information: we have recently launched a Lecturepedia app. On this Lecturepedia app, you can freely solve MCQs of all the subjects of CA Final, CA Inter, and CA Foundation, and you can also purchase classes of various faculties on this Lecturepedia app, and you can download this Lecturepedia app from Play Store. Okay, with this information, let us start revision of Essay 800 series. This Essay 800 series, will call this as specialized areas. Now, basically, for these specialized areas also, standards on auditing that we have discussed from Essay 200 till Essay 720, all these standards are applicable. Along with those standards, these standards are specifically applicable for these specialized areas. We will see what are the specialized areas. There are three specialized areas that are covered in this chapter. Firstly, Essay 800, which deals with audit of financial statements prepared as per special purpose framework. What is this special purpose framework? We will see. Okay, Essay 800 deals with audit of financial statements prepared as per special purpose framework. Now, generally there will be two types of frameworks. One is general purpose framework and another one is special purpose framework. Now, general purpose financial reporting framework will be used to prepare financial statements that are used for general use of all the public, whereas special purpose financial reporting framework will be used for preparation of financial statements that are for the use of specific users. Like, for example, let's say you wanted to take a loan from a bank, and in order to give loan to your company, bank needs to analyze your financials. So for that purpose of analysis, bank might ask you to prepare financials as per the rules and as per the framework that the bank has developed. Now you need to prepare the financial statements as per the framework that the bank has developed, and you need to submit these financials to the bank. Now, this type of framework is known as special purpose financial reporting framework, because here this framework, it is used specifically for the purpose of getting loan from the bank, from that specific bank, right? So these financial statements which are prepared as per special purpose financial reporting framework, let's say bank also requires the company, after preparing your financials as per this special purpose framework, you also get these financials audited by a auditor. Now company will appoint an auditor to audit the financial statements that are prepared as per special purpose framework. Now this auditor, while auditing the special purpose financial statements, he need to apply requirements of Essay 800. Now, along with Essay 800, all the standards that we have discussed till now, they also will be applicable. The requirement of Essay 800 is additional to those standards. Okay, it doesn't mean that all the standards that we have discussed till now are not applicable. They also will be applicable. Along with them, this Essay 800 will be applied. Okay, audit of financial statements prepared in accordance with special purpose framework. Another specialized area is audit of single financial statement or specific element of financial statement. Okay, you might be required to audit only balance sheet, only profit and loss statement, or you might be required to audit a particular item of financial statements. Like you are appointed to audit a revenue audit, you will call it. You're appointed to audit only stock audit, you will call it. So for such a type of audit of a single financial statement or audit of a specific element of financial statement, SA 805 will be applicable. Next, audit of summary financial statements. These summary financial statements, they will be prepared from the uh, complete set of financial statements. There are various requirements why these summary financial statements will be prepared, that we will be discussing while we discuss the standard. We will discuss that in detail. Okay, but these are the three specialized areas which will be dealt by SA 800 series. Hope that is clear. Now, structure of above standards. Now, if you see all these three standards, SA 800, SA 805 and SA 810, in all these three standards, you can divide these standards into three parts. Okay, the content of these standards is structured in three parts. Okay, the first part will be acceptance of engagement. Okay, when auditor accepts this type of engagement, what type of considerations has to be taken into account, that will be the first part of all these three standards. Next, in planning the audit, what considerations has to be taken into account. Okay, in planning and performance of engagement, what considerations has to be taken into account. And the final part is reporting. See, forming an opinion and reporting. So you can divide the content of these standards into these three parts. Okay, next, SA 800, which is, you already know, special considerations, audit of financial statements prepared in accordance with special purpose financial reporting framework. You already know difference between special purpose financial reporting framework and general purpose financial reporting framework. Okay, examples of general purpose financial reporting framework: Indian accounting standards, IFRS. These are examples of financial reporting frameworks which are general purpose. Okay, they are used for you know, general users, they will be used by general users. Hope that is clear. Now, what is a special purpose framework? We already discussed this. Financial reporting framework designed to meet financial information needs of specific users. In the example that I have discussed with you, bank, right? And it can be fair presentation or compliance framework. Difference between fair presentation framework and compliance framework we have already discussed in starting standards itself. Some of the examples of this special purpose framework: first example, cash basis of accounting and also cash flow information that an entity may be requested to prepare for creditors. Now there was an amendment in this point. Okay, this point is amended point only. Okay, I have included amended point only here, but earlier, see, there is no change in the concept, but the terminology has been changed. Earlier this example was, here now it is cash basis of accounting, right? Earlier a different terminology was used. Okay, the meaning is same, but the term used was different. That's it. Okay, that small minor amendment was made in this point. Okay, next example, financial reporting provisions established by regulator to meet requirements of that particular regulator. Okay, if any particular regulator, let's say for example income tax department, in future it might issue a financial reporting framework and ask the companies to prepare financials as per that particular framework when they are submitting financials to the income tax department. So that becomes a special purpose financial reporting framework. See, that requirement is not there as of now, but I'm just giving you an example. Okay, next, financial reporting provisions of a contract such as bond, indenture. Now let's say company wanted to raise money from public, IPO. Now, in order to raise money from public, or let's take another example. Company entered into a contract with government. Okay, government wanted to construct a particular bridge or particular dam. So for that particular purpose, government issued tenders and the company participated in the tender and the company won the contract. But in order to give that contract to the company during the period of construction, okay, let's say construction of dam takes 5 years. So during that 5 years period, company has to prepare its financial statements as per the financial reporting framework that is specified in the contract between government and the company, and submit it to the government. Why? In order to assess the financial stability of the company, government has kept this requirement. Okay, because construction of dam is a huge project, lot of money is involved. Now whether company is in a position to handle that huge project, okay, whether the financials of the company can support that project. So in order to assess this, the government wanted the financials of the company in a different format. Okay, that is easy for analysis of this point. So the government has designed its own framework, and it has kept that framework in the contract between company and government, right? So this is also one of the example for special purpose financial reporting framework. See, wantedly I'm going a little slow because there is an amendment in this standard. Okay, next, considerations when accepting such a framework. Now, I have told you now these standards, they are divided into three parts. The first part is considerations while accepting this engagement. While you accept the engagement, what considerations you have to take into account, okay, with respect to the financial reporting framework. So that depends on who prepared these financial reporting framework. Let's say the financial reporting framework has been prepared by a standard setting body. Okay, see, financial reporting framework developed by organization that is authorized to formulate standards for special purpose financial statements. Let's take for example ICAI. Okay, ICAI is a authorized organization to develop and issue standards on accounting and auditing, right? So if the framework, the special purpose framework is developed by ICAI, in such a situation, such framework will be acceptable to the auditor if the procedure followed and established is a transparent process. Okay, presumed to be acceptable if organization follows established and transparent process for developing that particular framework. Okay, next, if the financial reporting framework is prescribed by any law or regulation, in such a situation also the framework will be acceptable to the auditor until and unless there is anything contrary. Okay, see, presumed to be acceptable in absence of indications of contrary. Okay, until and unless there is any point because of which auditor cannot accept the engagement, uh, cannot accept the framework. In all other situations, the framework will be deemed to be acceptable to the auditor if it is prescribed by law or regulation. Next, financial reporting framework as per a contract. In such a situation, that financial reporting framework will be acceptable if it contains attributes as per the requirement of SA 210, that is agreeing to the terms of audit engagement. Okay, so this is how auditor will determine the acceptability of the framework. There is no amendment in these points. Okay, all these points are present earlier also. Now the amendment comes in the next concept, which is considerations in planning the audit of special purpose financial statements. Let us see. If you see, all these 5 points, they are as it is, they are not amended, but the sixth point is added. We will see that. First of all, we will see these points. So while planning the audit of special purpose financial statements, what considerations has to be taken into account by the auditor? See, you need to comply with ethical requirements, 5 ethical requirements, comply with the requirements of relevant standards. Okay, along with this standard, you should also comply with the requirement of all other relevant standards. Example, special consideration in respect of some of the standards or first one, determine materiality as per SA 320 irrespective of agreed threshold. Agreed threshold means now the financial statements are prepared by management and they are prepared for specific use of the user, specific user. Let's say that specific user is bank. Now management has entered into an agreement with the bank that in these special purpose financial statements, management will not correct the misstatements until and unless those misstatements cross a particular threshold. Now that threshold which is agreed between management and bank need not be the materiality level. Okay, auditor, he should again determine the materiality level irrespective of the threshold accepted between management and that particular specific user. Okay, auditor, he needs to again determine materiality as per SA 320. Hope this is clear. Next, auditor should also determine those charged with governance responsible for special purpose financial statements as per SA 260. See, the people, those charged with governance for general purpose financial statements can be different from those charged with governance for special purpose financial statements. So the auditor, while auditing special purpose financial statements, he has to determine those charged with governance for special purpose financial statements. Okay, see, these are the requirements of other standards that needs to be applied while conducting audit of special purpose financial statements. Next, this is newly added point. Okay, you should also obtain understanding of any significant interpretations of the contract that management made in the preparation of financial statements. Now I have given an example. The financial reporting framework, the special purpose financial reporting framework can be prescribed as per a contract. The example that I have given is contract between company and the government. Now the auditor, before auditing those special purpose financial statements, he should first of all understand the requirements of the contract. Okay, generally as per SA 315, before you conduct an audit, you will assess the risk of material misstatement by understanding the entity and its environment. Just like that, here also you should understand the requirements of the contract. Okay, now here you can find obtain understanding of significant interpretations. Okay, interpretation means analysis of different points that are present in the contract. Right, there will be various points in the contract. So how you analyze and how you understand those points is known as interpretation. Now what will be known as significant interpretation? See, auditor, he needs to understand only significant interpretation. Now what is a significant interpretation? The definition is given. Note, an interpretation is significant when adoption of other interpretation would make material difference in the information presented in the financial statements. See, what will be a significant interpretation? Let's say there is a particular point in the contract. Now if you understand this point in one particular way, then you will arrive at amount of some 50 lakh in the financial statement for a particular item. If you interpret this point in another way, you will arrive the same amount at 30 lakhs only. Now if you see, because of change in the interpretation, there is a material difference in the way in which you will determine the amount or the way in which you will present in the financial statements. So this is known as a significant interpretation if it affects the way in which it is presented or amount disclosed in the financial statement. Okay, see, I'll again read this point. An interpretation is significant when adoption of other interpretation would make a material difference in information presented in the financial statements. Hope that is clear. So this point is newly added point. This is amendment, you can say. Next, description of applicable financial reporting framework. Here also amendment is there. Let's see, the first 2 points, they were there earlier also. 0.3, 0.4, 0.5. These 3 points are newly added. Let us see. Description of applicable financial reporting framework. Where will you describe applicable financial reporting framework? You will describe applicable financial reporting framework in the auditor's report. See, auditor's report shall also describe the purpose for which the financial statements are prepared, and if management has choice of financial reporting framework, explanation of management responsibility shall also make reference to responsibility for determining that applicable financial reporting framework. If management is having option to select more than one financial reporting framework, okay, it is having choice to select the financial reporting framework, then auditor in his audit report under management responsibility, he should clearly mention that it is the responsibility of management to select the applicable financial reporting framework. Okay, these 2 points, they are there earlier also. Next, if auditor wants to give any key audit matter in his audit report on special purpose financial statements, then requirement of SA 701 will be applicable. Now, it doesn't mean that earlier, before amendment, the requirement of SA 701 was not applicable. Earlier also, SA 701 is applicable for audit of special purpose financial statements. But now, specifically, this point is introduced in the standard. Okay, there is no change in the interpretation or no change in the applicability of SA 701, but it is explicitly mentioned now in the standard regarding applicability of SA 701. Same with respect to SA 720 also. Now, if the special purpose financial statements are given along with a report, okay, generally the normal financial statements, they will be issued to the public by the company in the annual report, right? In the annual report, there will be board's report, there will be management report, there will be various analysis, right? All will be included. Now, with respect to that other information, basically in the annual report, apart from financial statements and audit report, whatever the information is present, that information will be known as other information, and auditor, he needs to verify whether that other information is consistent with the financial statement, right? Now, the same thing will apply here also. If management issues special purpose financial statements in a specific report, then that report will be known as annual report for the purpose of this standard, and the auditor, he needs to verify whether that other information is consistent with the financial statements. So here SA 720 will be applicable even with respect to this financial statements prepared as per special purpose financial reporting framework. Okay, next, audit report on special purpose financial statements may refer to audit report on general purpose financial statements in other matter paragraph. See, if auditor of special purpose financial statements in his audit report wants to refer the audit report of general purpose financial statements, then the auditor of special purpose financial statements can do so in the other matter paragraph in his audit report. Hope this is clear. So these 3 points are newly added as amendment. Next, alerting the users. Now, in the alerting the users, a small change has been made. Generally, special purpose financial statements are used only for specific uses of specified users, right? All the users cannot use. Now, there is a chance that the entity might publish these special purpose financial statements and audit report in the website. Now, the users might confuse, might misunderstand these audit report on special purpose financial statements. So, in order to avoid misunderstanding, the auditor in his audit report under emphasis of matter paragraph, he will clearly mention that this audit report is on special purpose financial statements. This is not for the use of general users. Like this, auditor will alert in his audit report. Okay, where will he give this alert? He will give this alert in emphasis of matter paragraph. Now, what is amendment here? Earlier, before amendment, auditor used to give this point in a separate paragraph by heading alert to the users. But now that alert to the user's paragraph is removed, and this alert is being given in the emphasis of matter paragraph itself. Hope this is clear. Next, auditor can extend this paragraph to restrict the users. See, additionally, same paragraph can be expanded to restrict distribution or use of auditor's report. Okay, in the same paragraph, auditor can mention that this audit report has to be distributed by the management only to specific users. Okay, like bank or the other party of the contract. Okay, as per the circumstances, who is the specific user will be determined by the auditor, and he needs to restrict the distribution of this report only to that particular specific users. Hope that is clear. So by this we have completed revision of SA 800. Now I will open PPT of SA 805. Moving to the next standard, SA 805. Now this SA 805 deal with a specialized area. What is that specialized area? Audit of single financial statement. That means audit of only profit and loss statement, or audit of only balance sheet, or audit of only cash flows is known as audit of single financial statements. Now there will be various requirements to the company wherein auditor will be asked only to audit a particular financial statement or particular element of a financial statement, right? And a specific element, account or item of the financial statements. Now when auditor has got this type of assignment, then he need to consider requirements of SA 805. Along with SA 805, even other standards will also be applicable. Okay, now, definitions. Single financial statement. What is meant by a single financial statement? You already know. A cash flow statement or a profit and loss statement is a single financial statement. Next, element of financial statement. Element of financial statement means a particular item of financial statements like revenue or inventory or asset, right? This is particular element of financial statement. Next, interplay between SA 800 and SA 805. See, SA 800 deals with audit of financial statements prepared as per a special purpose financial reporting framework. Right now, if auditor has got an assignment to audit a single financial statement or element of financial statement. Now, for audit of single financial statement or element of financial statement, SA 805 is applicable. Now, let's say if this is single financial statement or element of financial statement is prepared as per general purpose financial reporting framework, in such a situation only SA 805 will be applicable along with other standards, that is from SA 100 to SA SA 200 to SA 720. Those standards will be applicable. Along with those standards, SA 805 will also be applicable if the single financial statement or element of financial statement prepared as per general purpose financial reporting framework. If this is single financial statement or special purpose financial this is single financial statement or element of a financial statement is prepared as per special purpose financial reporting framework, then SA 800 will also be applicable along with SA 805, because these financial statement is prepared as per special purpose financial reporting framework. Whenever special purpose framework is involved, requirements of SA 800 will also be applicable, and this is a single financial statement, SA 805 will also be applicable, and remaining other standards from SA 200 to SA 720, they will however be applicable, right? See, SA 100 to 700 series, SA 805 and SA 800 are applicable. Note, SA 800 and SA 805 do not override requirements of other standards on audit. You need to remember this. Okay, whenever there is a clash between SA 800, 805 and other standards only will remain. Okay. Next, considerations when accepting the engagement. See, whenever you are accepting the engagement, the first thing that you will see is whether the financial reporting framework is acceptable or not. See, determine acceptability of applicable financial reporting framework as per SA 220. Sorry. Next, determine whether financial reporting framework provides adequate disclosures to enable users to understand the information conveyed in the financial statement or the element. Okay, you have to verify whether these financial reporting framework provides for adequate disclosures in the financial statement, so that the users will understand this single financial statement or the element of financial statement. Okay, you have to determine whether that is present in financial reporting framework or not. Next, a single financial statement or element may be prepared as per financial reporting framework that is based on financial reporting framework for complete set of financial statement established by authorized standard setting organization. Now, in some situations, what will happen is the single financial statement or element of financial statement will be prepared as per the financial reporting framework that is applicable for complete set of financial statement, like Ind AS or accounting standards. These financial frameworks, they are applicable for complete set of financial statements. Now, if the same framework is used for preparation of this single financial statement or element of financial statement, then such a framework is acceptable if it includes all requirements of framework on which it is based that are relevant to the presentation of single financial statement or of a specific element of financial statement. Okay, that financial statement will be acceptable if it contains all the requirements with respect to single financial statement or element of financial statement. Hope that is clear. Next, considerations while planning and performing the audit. See, considerations in planning and performing the audit. First of all, as usual, you will see compliance with requirements of all the ethical requirements, right? Comply with ethical requirements. There are 5 ethical requirements, right? Next, you have to obtain sufficient appropriate audit evidence. In case of a audit, the auditor, he will give the opinion by getting sufficient appropriate audit evidence, by basing his opinion on sufficient appropriate audit evidence. Now, if the auditor has already audited complete set of financial statements, then for the purpose of that audit of complete set, he would have obtained audit evidences. Now, if those audit evidences are useful for this single financial statement audit or for this element of a financial statement audit, then auditor can use the same audit evidences. It is permissible. Okay, see, audit evidence obtained as part of audit of complete set of financial statement can be used for audit of single financial statement or specific element if auditing in conjunction. Next, another point is that now if the auditor is auditing specific element of financial statement, let's say for example revenue, okay, sales, auditor is auditing sales. Now, auditor, he cannot audit sales in isolation. Sales are linked to debtors, cash, and also inventory, right? So when auditor audits sales, he would he should also perform some audit procedures on these relevant items like debtors for credit sales and cash or bank balance with respect to check whether in respect of cash sales whether cash has actually been received or not, and inventory balance, okay, after sale has been completed whether inventory is moved or not. So even though auditor has been appointed to audit single element of financial statement, here auditor cannot audit that single element in isolation. So auditor might be required to audit relevant elements also. Okay, see, Auditor may not be able to consider the financial statement or the element in isolation. Consequently, auditor may need to perform procedure in relation to interrelated items. Okay, just like the example that I have told you. Next, materiality for single financial statement. Sorry, yeah, materiality for single financial statement or specific element of the financial statement may be lower than the materiality for the complete set of financial statement. So auditor has to again determine the materiality for this audit of single financial statement or element of financial statement. Hope that is clear. Next, as I have already told you, all other standards from SA 200 to SA 720 series, they are applicable for the audit of single financial statement or a specific element. However, there are certain specific standards which have to be specifically verified. What are they? SA 240, because the SA 240 deals with risk of fraud. Risk of fraud is very significant. Auditor, he needs to comply the requirements of SA 240 specifically. Same with respect to SA 550, that is related party, and SA 570 with respect to going concern. Okay, auditor need to check, or auditor need to perform the procedures as per these three standards specifically. Okay, this is the amendment. This point is newly added. This point is also newly added. The auditor, he needs to determine those charged with governance in the organization with respect to single financial statement or element of financial statement, because I have already told you in SA 800 that those charged with governance for a complete set of financial statement might be different with those charged with governance for single financial statement or element of financial statement, right? Next, there are some more points that we need to discuss. We'll discuss those points from the book. Okay, after that we'll again come to this PPT. Still with respect to reporting we need to discuss. Okay, we'll first of all revise with respect to reporting. After that we'll discuss those remaining points from the book. Okay, we'll first of all see the reporting aspect. Now, reporting in this SA 805 is very important. Why it is very important? Let me tell you. Now, if auditor in his audit report on complete set of financial statement has given unmodified opinion, clean opinion, then auditor in his audit of single financial statement, he can either modify or unmodify his opinion. Same in case of a specific element also, auditor can modify or unmodify his opinion. Okay, if complete set of financial statements has unmodified opinion, then single financial statements auditor can give either modified or unmodified, and specific element also either modified or unmodified. Next, if complete set of financial statement has qualified opinion, in such a situation also on single financial statement auditor can modify or unmodify his opinion. In the same way, on specific element also auditor can modify or unmodify his opinion. Hope this is clear. See, here we are checking if on complete set of financial statement auditor has given modified opinion, what opinion he can give on single financial statement or element of financial statement. Okay, in that aspect we are seeing. Next, on complete set of financial statements auditor has given adverse opinion. See, adverse opinion. In such a situation, on single financial statement, auditor has to give only modified opinion. He cannot give clean opinion. Why? Because adverse opinion means what? There are misstatements in the financial statements, and those misstatements are material as well as pervasive. That means they are present in various items, they are affecting the entire financial statements. So on complete set you have given adverse opinion, but on single financial statement you are you wanted to give unmodified opinion. It is not permitted because it will contradict your opinion on complete set. Okay, in complete set you are saying misstatements are pervasive, that means they are present across the financial statements. Then if they are present across the financial statement, how can you give unmodified opinion for audit of a particular single financial statement? You have to give modified opinion only. Hope you understood this. Next, on specific element or item also you have to give only modified opinion, but there is a exception for this. We will see what is that exception. Okay, exception 1. That means in such exceptional situation, even though on complete set of financial statements there is adverse opinion, auditor on his audit of a specific element or item of financial statement, he can give unmodified opinion in such exceptional situation. What is that exceptional situation? We will see. Okay, that exception 1, it is applicable for this, and for next point also same exception will be applicable. So after completing next point we will see the exception. Next, if the auditor gives on complete set of financial statement disclaimer of opinion, then on single financial statement only modified opinion has to be given. But however there is exception for this exception is exception number 2. Okay, both the exceptions are different, that's why I have given exception 1 and exception 2. Okay, the points that has to be satisfied in order to claim that exception or is different, so it is exception 1 and exception 2 that I have given. Next, if auditor has given disclaimer of opinion on complete set, then on specific element auditor has to give only modified opinion. That, but however there is a exception. This exception is exception 1. Okay, now we will see what are the exceptions. That means you should remember, in exceptional situation auditor can give unmodified opinion even though the complete set of financial statements contain adverse or disclaimer of opinion. Okay, let us see. Yeah, the same I have given here. Now exception 1, it is not prohibited by law or regulation to give unmodified opinion. Okay, along with this condition, both audit reports are not published together. Both audit reports means audit report on complete set of financial statements and audit report on specific element of financial statements, they are not published together. Okay, this is the second condition that needs to be satisfied. And the third condition, specific element do not constitute major portion of financial statement. Okay, the specific element that you are auditing should not constitute major portion of financial statement. If these three conditions are satisfied, then even though on complete set you have given adverse or qualify or disclaimer of opinion, on single element of financial statement you can give unmodified opinion. Next, exception number 2. This exception number 2 is applicable for a second situation, that is when auditor has given a disclaimer of opinion on complete set and auditor wants to give unmodified opinion on single financial statement. Okay, so what is the exception? Example, I will explain this exception in the form of example. Now in the complete set of financial statement, auditor has given disclaimer of opinion because of profit and loss statement and cash flow statement. Okay, because of these two statements auditor has given disclaimer of opinion, but balance sheet is fine, there is no misstatements in balance sheet. Now the auditor has been appointed to audit single financial statement, and that single financial statement is balance sheet. Now in this situation, since the auditor's opinion or since the disclaimer in complete set is due to cash flow and profit and loss, and there are no misstatements in balance sheet, and auditor has been appointed to audit single financial statement, and that single financial statement is balance sheet, you can give unmodified opinion on this balance sheet. Okay, this is the exceptional situation. Now there are some more points, we will discuss them from our book, audit concise book. What happened to this? Yeah, yeah, yes, say 805. All this we have discussed, right? Consideration when planning the audit, the two amended points also we have discussed. Yeah, form of opinion. Now the form of opinion on single financial statement or specific element of financial statement, it will depend on laws and regulation and applicable financial reporting framework. Now whether auditor has to use the terms presents fairly in all material respects or gives a true and fair view. Okay, whether auditor has to use these two terms in the audit report of single financial statement or element of financial statement, that depends on following factors. What are they? First factor, whether applicable financial reporting framework is explicitly or implicitly restricted only to complete set of financial statements. You need to check that. Okay, if it is restricted only for the preparation of a complete set of financial statements, you cannot use these terms present fairly or gives true and fair view for the audit of a single financial statement or element. The next thing that you need to see is whether single financial statement or specific element of financial statement will comply fully with each of those requirements of the framework, and in order to uh, present more fairly, whether deviation from the framework is permitted for the single financial statement. Okay, in order to achieve more fairness, if deviation is permitted, then you can use these terms present fairly or use true and fair view. Hope that is clear. Next, application of various other specific standards. See, these are not uh, any new addition. Okay, basically this is not a change in the concept. Okay, all these standards, SA 700, 570, 701, all these standards, they are applicable even prior to amendment also, but now the institute has specifically included these standards in the SA 805. Even before this amendment also, these standards are applicable. Okay, for audit of single financial statement or element of financial statement. Now SA 700, basically auditor is required to apply requirements of SA 700 adopted as necessary in the circumstances of the engagement wherever necessary while forming the opinion. Okay, requirements of SA 700 are applicable. Next, requirements of SS 570. Now responsibility with respect to making assessment with regarding going concern assumption lies with the management. So you need to explain this responsibility in the management responsibility paragraph as per SA 570. This requirement is applicable even in case of audit of single financial statement or element. And next, you should also explain auditor's responsibility with respect to going concern in the auditor's responsibility paragraph. Okay, this is requirement as per SA 7 not as SA 570. Next, SA 701. Whenever auditor wants to communicate key audit matter in audit report on single financial statement or element of financial statement, then requirements of SS 701 are applicable. Next, SS 720. This point we have already discussed even in SA 800 also. If the management decides to issue single financial statement or element of financial statement along with a specific report, then that report will be considered as annual report for this purpose, and the requirement of the auditor to check whether other information that is present in the annual information is consistent with the single financial statement or element of financial statement will be applicable even here also as per SS 720. Next, signature of the auditor he needs to sign the audit report. Okay, if it is a firm, on behalf of firm he needs to sign. If it is an individual, in his individual capacity he needs to sign. Next, implications of a complete set of financial statement auditor's report for the audit of single financial statement or specific element of financial statement. See, whether a matter included in the auditor's report on complete set of financial statement is relevant to the context of engagement report on single financial statement or specific element involves professional judgment. Now, the impact of audit report on complete set of financial statements on the audit report on single financial statement or element of financial statement. Okay, whether there is any impact or not, that depends on the professional judgment of the auditor. Okay, in deciding that, auditor's professional judgment will be involved. However, factors that may be relevant in considering these implications include following. What are they? Nature of the matter being addressed in the auditor's report on complete set of financial statement and extent to which it relates to what is included in the single financial statement. Okay, if in the auditor's report on complete set of financial statement, auditor is giving modified opinion with respect to revenue, and another auditor he has been appointed to audit specific element, and that is also a revenue. Now, obviously, for the audit of single element or specific element which is revenue, will be having impact of the complete set of financial statement, because on complete set of financial statement audit report, auditor has modified the opinion because of revenue. Okay, since revenue is specified in the audit report and the specific element that is being audited is also revenue, obviously the impact of this complete set of financial statement audit report will be there on the audit report of specific element. Next, pervasiveness of matter described in the auditor's report on complete set of financial statement. Pervasiveness, this point we have already discussed while discussing the reporting point. Next, nature and extent of differences between applicable financial reporting the framework. Okay, what is the differences between applicable financial reporting framework used for complete set and the specific element? Next, extent of difference between periods covered by the complete set of financial statement compared to the period or date of the single financial statement. Okay, you should also see the periods covered by complete set and the single financial statement. Let's say complete set of financial statement is for 1 year, and that 1 year is from 1st April 2024 to 31st March 2025, whereas single financial statement audit is for 6 months, and that 6 months is also from 1st April 2025 to 30 September 2025. So here periods are different, so there will not be any impact of complete set on the single financial statement. If the periods are same, then obviously there will be impact. Okay, you need to see this. Next, time elapsed since the date auditors report on complete set of financial statements. Okay, uh, how much time has completed since the auditor has given audit report on complete set of financial statement? Okay, if the long time has passed, then there will not be any impact. If recently it has been given, then there will be impact. Okay, uh, example of a similar kind is given here. Okay, another point, if auditor of sorry if auditor of single financial statement or specific element of financial statement wanted to refer to the audit report of complete set of financial statement in his audit report, then auditor can do so in other matter paragraph. Okay, That's it. And the remaining reporting aspect we have discussed already. However, another some 2 points are added. If the auditor's report on entities complete set of financial statements include modified opinion or emphasis of matter paragraph, only these 2 points were there earlier. Okay, if auditor's report on complete set is having modified opinion or emphasis of matter paragraph, only then auditor will consider that impact on the reporting on single financial statement or specific element of financial statement. But now, even if there is a material uncertainty related to going concern as per SA 570 in the complete set of financial statement, auditor should consider this effect also on audit of single financial statement or element of financial statement. And also a statement that describes an uncorrected material misstatement of other information in accordance with SA 720. Okay, if auditor's report on complete set of financial statement specifies that there is a material misstatement in the other information, then auditor's report on single financial statement or specific element of financial statement should also consider this point for the audit report on single financial statement or specific element. Okay, so by this essay 805 gets completed. Hope you understood essay 805. Wantedly I have discussed this concept a little slow. Okay, now we'll go to next standard, which is essay 810, right? So essay 810, it deals with engagement to report on summary financial statements. What are these summary financial statements? Summary financial statements are prepared from complete set of financial statements. They will show a summary of the complete set of financial statements. Now, what are the situations in which these summary financial statements has to be prepared? Let's say, for example, for investor presentation, you cannot present entire complete set, you cannot discuss the entire complete set with the investors, because it will take a lot of time, and investors will also not understand the complete set of financial statements. So summary set financial statements will be prepared for discussing in the investor presentation. Okay, and these summary financial statements will be less detailed when compared to complete set of financial statements. See, these summary financial statements are derived from complete set of financial statements, and they are less detailed than the complete set of financial statements. They are used for investor presentation, submission to credit rating agencies, or including in prospectus for IPO. Next, engagement acceptance. Even this summary financial statements should also be audited by the auditor to check whether they are true summary of the complete set of financial statements or not. Now, in order to accept this engagement, generally, if the auditor who has audited complete set of financial statement has also been given the engagement to audit summary financial statements, he will accept the engagement. And in fact, in 99% of the cases, the auditor who has audited the complete set should only be given the engagement to audit the summary financial statements. Why? Because auditor has already audited the complete set, so he's having knowledge with respect to the entire financials and also business of the entity, so it becomes easy for him to audit summary financial statements. If you appoint some other auditor to audit summary financial statements, he will have to again understand the entire entity, he will have to understand the complete set, he will have to understand the audit done by the previous auditor, right? So all this has to be done. So mostly, if the engagement to audit summary financial statement is given to the auditor who has conducted audit of a complete set of financial statements, then he will accept that engagement. See, engagement to report on summary financial statement shall ordinarily be accepted when auditor has been engaged to conduct the audit of complete set of financial statements. Okay, now factors that has to be considered in determining acceptability of the engagement. Obviously, determine whether applied criteria are acceptable. Here, criteria means nothing but framework, financial reporting framework. Okay, the auditor, he will accept the engagement if the applied criteria is acceptable. Now, how to determine whether the applied criteria is acceptable? preparation of summary financial statements require management to determine information that needs to be reflected in the summary financial statements so that they represent fair summary of the audited financial statements. Okay, it is the responsibility of the management to determine which items of a complete set of financial statements has to be included in the summary financial statements. Next, criteria for presentation of summary financial statements may be established by authorized or recognized standard setting organization or by law or regulation. Okay, the criteria for preparing summary financial statements can be developed by authorized or recognized standard setting organization or by any law or regulation. Now, where established criteria do not exist, if established criteria is not there, then criteria may be developed by management, for example based on practice that is available in the industry. Okay, if the financial reporting framework for preparation of summary financial statements is not there, then management they themselves can develop the financial reporting framework. Now, factors affecting auditors determination of acceptability of applied criteria. What factors will affect the auditor's determination of whether to accept the criteria or not? Firstly, nature of the entity. What is the nature of entity and what is the purpose of summary financial statements, information needs of the intended users, and whether applied criteria will result in misleading results. Okay, these factors auditor will see to determine whether applied criteria is acceptable or not. If auditor concludes that applied criteria is not acceptable and shall not accept the engagement. Okay, if auditor feels that applied criteria is not acceptable, that is the financial reporting framework is not acceptable, then auditor will not accept the engagement. Hope that is clear. Next, auditor he needs to obtain agreement of management that it acknowledges and understands its responsibility for preparation of summary financial statements to include auditor's report on summary financial statement in any document that contains summary financial statements. Okay, the auditor to accept the audit of summary financial statements, he should obtain a written confirmation from the management confirming their responsibility for preparation of summary financial statements, and management will include the auditor's report on summary financial statements in any document that contains the summary financial statements. That means the management will not issue summary financial statements alone. Okay, along with summary financial statements, management will also issue auditor's report. Okay, it is a responsibility of the management to issue that. Okay, so auditor has to obtain this agreement from the management. Next, to make audited financial statements available to the intended users of summary financial statements without undue difficulty. Now, to whomever you are issuing summary financial statements, for those users along with summary financial statements you should also give audited complete set of financial statements, because summary financial statement will not contain detailed information. If at all the users wanted detailed information, or if at all they wanted to understand in more detail of any item presented in the summary financial statements, they can refer the complete set of financial statement. For this purpose, whenever the management issues summary financial statements, along with that summary financial statement you should also issue complete set of audited financial statements. Now, if you are not issuing a complete set of audited financial statements, at least you should communicate to the users from where they can get these complete set of financial statements. See, the summary financial statements describe clearly from whom or where audited financial statements are available. Okay, by contacting whom or by visiting which website you can get complete set of financial statements, that needs to be clearly there in the summary financial statements. Audited financial statements are on public record, or if the entity has already published these audited financial statements on the website, it has to tell to the users of summary financial statements that our complete set of financial statements are already available on public record. If you want, you can check them. Or management has established a process by which the intended users of summary financial statements can obtain a ready access to the audited financial statements. Okay, if at all any process has been there to get access to the complete set of financial statements, you have to communicate that process to the users of complete set of financial statements. sorry, to the users of summary financial statements. Okay. Next, agree with management on the form of opinion to be expressed on the summary financial statements. Okay. So these factors auditor needs to consider in order to accept the engagement. Okay, first of all, he needs to determine acceptability of the framework, that is criteria. Next, he needs to obtain written uh, agreement from the management with respect to its responsibility, and finally auditor has to agree with the form of opinion that he expresses on summary financial statements with the management. Okay. Next, nature of procedures to be performed by the auditor. What procedures auditor will perform on the summary financial statements? Evaluate whether summary financial statements adequately disclose their summarized nature and identify the audited financial statements. See, the auditor, he has to check whether summary financial statements clearly disclose that they are summarized financial statements, and the summary financial statements should also refer or identify the audited complete set of financial statements. Next, evaluate whether audited financial statements are available to the intended users. We have already discussed this point. The management, whenever it gives summary financial statements to the users, along with summary financial statements, it should give audited financial statements also. If at all it is not giving complete set of audited financial statements to the users, at least it should make sure, or it should communicate to the users from where they can get complete set of audited financial statements. Okay, auditor has to check whether this facility is available or not. When summary financial statements are not accompanied by the or audited financial statements, then evaluate whether they describe clearly from whom or where the audited financial statements can be obtained. The law or regulation that specifies the audited financial statements need not be made available to the intended users. If at all, as per any law or regulation, it clearly specifies that the complete set of financial statements, the complete set of audited financial statements need not be given along with the summary financial statements, then auditor needs to mention, then management needs to mention in the summary financial statements as per which law it is not required to submit or make available the audited financial statements. Next, whether such a disclosure is there or not has to be seen by the auditor. Next, evaluate whether summary financial statements are prepared in accordance with the applied criteria or not. This is a basic point that the auditor has to check. Next, determine whether summary financial statements agree with audited financial statements. Okay, obviously summary financial statements are prepared from complete set of audited financial statements, so the amounts of figures that are shown in summary financial statements should match with the audited complete set of financial statements, right? And evaluate in view of purpose of summary financial statements whether summary financial statements contain information necessary. Okay, based on the purpose for which summary financial statements are prepared, auditor needs to see to satisfy that purpose whether required information is present in the summary financial statements or not. Next, form of opinion that the auditor has to give on the summary financial statements. See, when auditor has concluded that unmodified opinion on summary financial statement is appropriate, okay, auditor wants to give unmodified clean opinion on summary financial statement. Auditor opinion shall, unless otherwise required by law or regulation, use one of the following phrases. Okay, what phrases auditor has to use when he determines that he wants to give unmodified opinion on complete set of on summary financial statements? The first statement, first phrase that you can use is summary financial statements are consistent in all material respects with the audited financial statements. Okay, this phrase you can use. Or summary financial statements are fair summary of audited financial statements. Okay, you can use any of these two phrases if you wanted to give unmodified opinion on the summary financial statements. Next, if law or regulation prescribes a wording of the opinion on summary financial statements in terms that are different from those described above, then auditor shall apply the procedures discussed earlier and any further procedure necessary to enable the auditor to express prescribed opinion. Now, if any particular law or regulation prescribes different wordings of the auditor's opinion on the summary financial statements than this, okay, Okay, instead of these two phrases, if any law or regulation prescribes different wordings, then auditor has to perform the procedures that we have discussed earlier, and also other procedures. Okay, and also other procedures that are necessary to enable the auditor that particular type of opinion, and evaluate whether users of summary financial statements might misunderstand the auditor's opinion, and if so, whether additional explanation can mitigate. Okay, auditor should also evaluate whether users of summary financial statements might misunderstand the auditor's opinion. If at all auditor feels that users might misunderstand the auditor's opinion, then he has to determine whether additional explanation can mitigate misunderstanding of the users. Okay, if auditor feels that additional explanation also doesn't mitigate the misunderstanding of the users, in such a situation he shall not accept the engagement in the first place. Okay, you shall not accept the engagement. Next, element of elements of auditor's report. Basically, the format of auditor's report on the summary financial statement. First of all, you'll be having title. Okay, the general format. Next, there will be addressee. You need to identify summary financial statements, including title of each statement forming part of summary financial statements. Identify audited financial statement, that is complete set of financial statement, and you need to clearly express your opinion. And statement indicating that summary financial statement do not contain all disclosures required by the financial reporting framework, because this is a summary financial statement. Next, if required, state that summary financial statement and audited financial statement do not reflect the effects of events that occur subsequent to the date of auditor's report on audited financial statement. Okay, if required, you can state that neither summary financial statements nor audited financial statements, they both do not reflect the subsequent events that have occurred subsequent to the date of auditor's report on complete set of financial statements. Okay, that point you can mention. Next, refer to auditor's report on audited financial statement. Okay, in the audit report on summary financial statements, you should also refer to the auditor's report on complete set of financial statement. This reference you can make in other matter paragraph. Next, description of management responsibility. Statement that auditor is responsible for expression of opinion. Next, auditor signature will be there, UDIN will be there, and date of audit report will be there. Right, that is the and place of signature. This is the format of audit report on summary financial statements. Next, modification to opinion, emphasis of matter paragraph, other matter paragraph in the auditor's report on audited financial statements. Okay, if auditors report on audited financial statements, that is complete set of financial statements, contains modified opinion or emphasis of matter paragraph or material uncertainty with respect to SA 570 or communication of key audit matter or material misstatements in the other information as per SS 720. Okay, if at all any of these five are there in audit report on complete set of financial statements. Okay, basically before amendment only these 2 points was there, now these additional 3 points also introduced. Then in such a situation, but already satisfied that summary financial statements are consistent. Okay, even though on complete set of financial statements modified opinion, emphasis of matter paragraph or material inconsistency in other information is there, auditor feels that the complete set of the summary financial statements, they are satisfactory in all material respects, then auditor's report on summary financial statement shall state that auditor's report on audited financial statement contains a qualified opinion, emphasis of matter, other matter, or material uncertainty, or key audit matter, or a statement that describe uncorrected material misstatement in other information. Okay, if auditor on summary financial statements feels that these summary financial statements are consistent in all material respects, but audit report on complete set of audited financial statements contains either modified opinion, emphasis of matter paragraph, or paragraph related to material uncertainty with respect to going concern, or key audit matter paragraph, or the material uncertainty in other information. If any of these five are there in audit report on complete set of financial statement, then auditor in his audit report on summary financial statement should also mention that in the audit report on complete set of financial statement these are there, okay, either modified or key audit matter is there, or material misstatements and other information is there, okay, that point you need to mention. Next, you need to describe basis for qualified opinion. Okay, see, all this it should be mentioned in summary financial statements audit report, stating that in the audit report of complete set of financial statement there is a qualified opinion or emphasis of matter paragraph like this. Okay, next, matter referred to in emphasis of matter paragraph, uncorrected material misstatement, effect thereof on the summary financial statement. Okay, what effect they will be having on the summary financial statement you need to mention. Next, when auditors report on audited financial statement contain adverse opinion or a disclaimer of opinion. Okay, if auditors report on complete set of financial statement contain adverse or disclaimer, okay, not qualified, then auditors report on summary financial statement shall additionally state that auditors report on audited financial statement contain adverse or disclaimer of opinion, and because of that, see, you should also describe basis for that adverse or disclaimer of opinion, and state that as a result of such adverse opinion or disclaimer of opinion it is inappropriate to express opinion on the summary financial statements. That means whenever in the audit report on complete set of financial statements there is a adverse or disclaimer of opinion, then auditor he should not give opinion on the summary financial statements. Hope that is clear. Next, modified opinion on summary financial statements. If summary financial statements are not showing true and fair summary of the complete set of financial statements, then auditor he will give adverse opinion on the summary financial statements. Hope that is clear. Next, restriction on distribution or use or alerting the readers on to the basics of accounting. Now, just like in SA 800 we have read about alert to the users, the same thing you can alert to the users that these financial statements are summary financial statements. In the same way you can restrict the use of this audit report only to specific users. Okay, the same point. Next, unaudited supplementary information presented along with summary financial statements. If supplementary information which is unaudited is presented along with summary financial statements, then auditor needs to see whether the summary the unaudited supplementary information has been properly differentiated from the summary financial statement. Okay, clearly differentiated. If auditor concludes that it is not clearly differentiated, then you need to ask management to change the presentation. If management refuses to do so, then auditor shall explain the auditor report on summary financial statement that such information is not covered by the audit report. Okay, generally the supplementary information, on the supplementary information, auditor will not give his audit opinion. Okay, auditor will give his audit opinion only on the financial statements. Now, if management has presented supplementary information without differentiating it from the summary financial statements, then even though auditor is not giving his opinion on the summary financials on the supplementary information, users might feel that auditor is giving opinion on supplementary information also, because supplementary information has not been differentiated from the summary financial statements. To avoid this misunderstanding, auditor in his audit report he has to mention that he is not giving his opinion on the supplementary information, he is giving opinion only on the summary financial statements. Okay, we have discussed this point even in SS 720 also. Next, other information in document containing summary financial statement, we have discussed this point also in SA 800. If in SA 800 we discussed, in SA 805 also discussed, we discussed, right? If summary financial statements are presented in a report, then that report will be considered as annual report for the purpose of SA 720, and auditor he needs to check whether the other information that is present in that report is consistent with the summary financial statement. If at all it is not consistent, there are material misstatement, auditor needs to ask the management to correct those material misstatements. Okay, next, auditors association. See, if the auditor who has audited the complete set of financial statements has not been appointed to audit the summary financial statements, and the management in a report that is containing the summary financial statements, it wanted to refer to the audit that has been, or it wanted to refer to the auditor who has conducted audit of complete set of financial statements, then such a reference can be made by the management only if the reference to the auditor is made in the context of auditor's report and the statement does not give impression that the auditor has reported on the summary financial statements. Okay, if management wanted to refer to the audit that has been conducted by the auditor on the complete set of financial statements, then such a reference can be made only if such reference is being made in the context of auditor's report and such reference does not give an impression to the users that the same auditor has audited the summary financial statements also, because actually the auditor of summary financial statements is different from the auditor of the complete set of financial statements, but management in the report in which the summary financial statements are being presented, it wanted to refer to the auditor who has audited complete set of financial statements. Such a reference you can made, but such a reference should not give an impression to the users that the same auditor has audited the summary financial statements also. Okay, if at all the auditor feels that such reference is giving an impression to the users that he has audited summary financial statements also, in such a situation the auditor should request the management to remove such a reference or to change the wordings of such paragraph. If management refuses to make the change, then auditor has to take necessary steps to avoid the users from understanding that the same auditor has audited the summary financial statements. Okay, whatever the steps the auditor want, he can take to avoid the users from misunderstanding. Okay, that is with respect to this auditors association. Next, timing of work and events subsequent to the date of auditor's report. Now, auditor's report on summary financial statements should mention the point that audit report on complete set of financial statements and also audit report on summary financial statements do not consider any subsequent events that has occurred after the date of auditor's report on complete set of financial statement. Okay, this point needs to be mentioned. So this is with respect to entire essay, entire essay 810. Okay, there are also two more points. We'll also see these 2 points. The auditor may become aware of facts that existed at the date of auditor's report on the audited financial statement, but of which auditor previously was unaware. See, now auditor is auditing summary financial statements. Now, while auditing summary financial statements, auditor came to know about certain facts which are present on auditor's report on date of auditor's report on complete set of financial statement, but at that time auditor was not aware of those points, but now he has become aware of those points on the date of summary financial statements, right, on the date of auditor's report on summary financial statements. Now in this situation, auditor, see, I hope you are understanding what I am saying. This is date of auditor's report on complete set. On this date there are certain facts which auditor was not aware on that particular date, but while auditor is giving audit report on summary financial statements, okay, date of audit report on summary financial statements, on this date auditor came to know about those facts which were present as on date of auditor report on complete set of financial statements. In such a situation, auditor has to give audit report on summary financial statements only if these issues are resolved. Hope you understood. Next, when auditors report on summary financial statement after completion of the audit of financial statement. See, if auditor is conducting audit of summary financial statements after he has completed audit of complete set of financial statements, then he need not obtain additional audit evidences with respect to audit of complete set of financial statements, because he has already done the audit of complete set of financial statements before doing audit of summary financial statements. Hope this is clear. So by this we have completed revision of entire essay 800 series, right? In the next class we'll meet with another revision. Until then, take care, bye bye, see you.